Today, we're cracking open a secret playbook. We're diving deep into the hidden world of financial crime to see exactly how dirty money gets clean.
All right, so let's kick things off with a bit of a riddle. What does a plain old credit card,
What does that have in common with a gift card you might get for your birthday and the bright, flashing lights of a casino? I mean, on the surface, they seem totally unrelated, right? Well, it turns out they're all tools. They're all cogs in a massive, hidden financial machine that criminals use to make dirty money look totally legitimate. So, in this explainer, we're going way beyond the usual suspects. The big banks. We're going to look at the really unexpected places where illicit money gets a serious makeover. We all have that image in our heads, right? Some shady character with a briefcase stuffed with cash. But honestly, that's kind of old school. The real game today is way more sophisticated, and it uses systems and products that you and I interact with pretty much every day. And that brings us to our first stop, which, believe it or not, is probably right in your pocket. Let's see how these everyday items can be turned into a personal laundromat for dirty cash. Okay, check this out. It's a technique called the credit balance refund scheme. It sounds complicated, but the concept is just, well, it's shockingly simple. Criminals take a regular credit card bill and they deliberately overpay it with dirty money. Then they just call up the credit card company, say, "Oops, I made a mistake," and ask for their money back. And what do they get in return? A perfectly clean check from a major financial company. Let's just walk through it. Imagine our launderer, we'll call her Susie, has a $1,000 credit card bill. That's step one, totally normal. Now for step two, she uses illicit cash to send a payment of, let's say, $3,000. Her account now has a negative balance. The credit card company actually owes her $2,000. Step three, she calls them up and asks for that extra money back. And finally, step four, a clean check for $2,000 arrives in the mail. Just like that, the dirty cash is gone, replaced by a legit check. And that's the transformation right there. You start with a simple debt, you inject dirty money into the system, and what comes out the other side is a squeaky clean financial instrument. The criminal source of the funds is now totally hidden. And it's not just credit cards. Prepaid cards are a huge vulnerability. You have your closed loop cards, which are basically just gift cards for a specific store, but the real risk comes from open loop cards, the ones with the Visa or MasterCard logo. Think about it. They can be bought with cash, often with no ID needed, and then used just like a debit card almost anywhere in the world. They become a nearly untraceable way to move money around. So we've seen how criminals can hijack personal financial tools. But what if they need to move bigger amounts and move them fast? For that, they turn to an entire industry that's built on moving money, often way outside the traditional banking system. This world is made up of what regulators call money services businesses, or MSBs. It's a big category that covers everything from local check cashers and currency exchanges to global money transmitters and the places that sell money orders or those open-loop gift cards we just talked about. Their common purpose is moving value quickly, often for people who don't use typical banks. The core vulnerability of many of these services is sheer speed. I mean, someone can walk into an agent in one country with a bag of cash, and just a few hours later, an associate can pick up that same amount in another country. But here's the real kicker. The money is often paid out before the original funds have even been verified and cleared. That time gap creates a window of opportunity that criminals are experts at exploiting. So how do you even spot this stuff? Regulators look for telltale red flags. For instance, a customer trying to send, say, $9,900 just to stay under that $10,000 reporting threshold. Or maybe you see two people come in separately, but they're clearly working together to break one big transaction into two smaller ones. That's a classic tactic called structuring. Other signs are even simpler, like someone using multiple IDs, or just wanting to exchange a huge amount of small bills for large ones. The methods we've covered are good for smaller sums, but what about the really big scores? For that, criminals turn to high-value industries where large transactions are just business as usual, allowing them to hide their activities right out in the open. The classic example is a casino. It's a beautifully simple process. A criminal walks in with 30 cash, buys a mountain of chips, makes a few low-risk bets just to create the appearance of gambling, maybe betting on both red and black at the roulette table, and then they head to the cage to cash out. The casino hands them a check for their winnings, and just like that, the dirty cash has a legitimate origin story. But casinos aren't the only game in town. In the insurance industry, criminals buy products that have a cash value, like a life insurance policy. Then they cancel it early, sometimes even paying a penalty, just to get a clean refund check back from the insurance company. Then there's the securities market, where the sheer speed of transactions provides cover. They can use dirty money to buy an investment and then sell it almost immediately, turning the funds into investment proceeds. And finally, with precious metals like gold, the appeal is anonymity and portability. You can buy gold bars with cash and then transport and sell them almost anywhere in the world. Now, all of these schemes, from credit card refunds to gold bars, often have one thing in common. They rely on a critical layer of the financial system, the professional gatekeepers. These folks can be unwitting pawns, or in some cases, very willing accomplices. Think about it. Professionals like lawyers, accountants, and investment advisors, they stand at the very entrance to the legitimate financial system. They can be the lock that stops financial crime cold, or they can be the key that unlocks the door for it.
These are professionals whose entire job involves helping clients move money and manage assets. That unique position means they are perfectly placed to see suspicious activity, and they have the ability to either prevent it and report it, or to just look the other way.
So how are they exploited? Well, a criminal might hire a lawyer to create a confusing web of shell companies and trusts, making it nearly impossible to trace who really owns the money. They might use an accountant to manage the purchase of real estate, or simply ask an investment advisor to perform transactions that give illicit funds a veneer of legitimacy.
This quote from the source material really just sums it all up. Their role is important because they can block or facilitate the entry of illicit money into the financial system. They truly are the critical checkpoint. Ultimately, what this all shows is that the fight against financial crime isn't static. It's a constant, dynamic cat and mouse game. As soon as regulators close one loophole, criminals are already busy finding or creating a new one. Which leaves us with a final, important question. We've seen how criminals adapt and use the tools of their time. So as our entire financial world goes digital, from crypto to instant peer-to-peer payments, where do you think the next hidden laundromat will appear?